Real estate syndication is a way for investors to pull their resources together in order to buy and manage larger properties, which the investors might otherwise not be able to afford on their own. It allows investors to access investment opportunities that may otherwise have been out of reach due to the high cost of entry. A sponsor or a syndicator identifies a potential real estate investment opportunity, such as an apartment building or a commercial property. They then put together a syndication team, which may include lawyers, accountants, and other professionals to help with the process. Next, the syndicator raises capital from investors to fund the purchase of the property. This is typically done through a private offering where the syndicator presents the investment opportunity to a select group of accredited investors. This is usually done through a private placement memorandum, a PPM, which is just a legal document that is provided to prospective investors that details the offering, including the description of the property, how it will be managed, the use of the proceeds, the risks of the investment, and the subscription terms, among other things. The legal structure of the syndication is typically set up as a general partnership, where the syndicator acts as general partner, and the investors act as limited partners. The general partner has unlimited liability, while the limited partner's risk is contained solely to the amount they invested. Once the capital is raised and the legal entity is formed, the syndicator uses the funds to purchase the property, and the general partnership becomes the owner of the property. The investors become limited partners in the syndication and are entitled to a share of the profits from the property. The syndicator is responsible for managing the property. The syndicator typically charges a fee for these services, which may be a flat fee, a percentage of the total capital raised, or a percentage of the profits generated by the property. In addition to the management fee, the syndicator also typically receives an ownership share, which varies from one syndication to another, but is typically a minority share, with the majority of the ownership being held by the investors. Typically, the syndicator's ownership is somewhere around 30%, and the combined ownership of all of the investors is typically around 70%. So, in addition to the management fee, the syndicator will also be entitled to 30% of all net profits of the syndication. The investors receive a share of the profits as well as any appreciation in the value of the property according to the terms of the syndication agreement. The specific terms of the syndication agreement will outline how and when the profits and appreciation will be distributed to the investors. For example, the agreement may specify a certain percentage of the profits that will be distributed to the investors, or it may outline a formula for calculating the distribution. Depending on the size of the deal, there may be dozens or even hundreds of individual investors who put their money into the syndication. Most syndications have a minimum investment amount which each investor is required to put in, such as, for example, a $50,000 or a $100,000 minimum. Some syndications also have a maximum investment threshold as well. Additionally, according to the Securities and Exchange Commission rules, investors must qualify as either accredited or sophisticated investors in order for the syndicator to be allowed to accept their investments. To qualify as an accredited investor, an individual must have a net worth of at least $1 million, not including the value of their primary residence, or have income of at least $200,000 per year or $300,000 per year if filing jointly for the past 2 years with the expectation of earning the same or more in the current year. A sophisticated investor is an individual who has a high degree of knowledge and experience in the field of investing, financial, and business matters, and who is considered capable of evaluating the risks and the potential benefits of a particular investment. This is a more fluid definition where an individual may qualify if they can show that they have a track record of investing in real estate and have owned or currently own investment properties. One of the benefits of real estate syndication is that it allows investors to diversify their portfolio and invest in larger professionally managed properties without having to go through the process of buying and managing the properties on their own. However, before getting into any real estate investment, you should carefully consider the risks involved. Real estate syndication is no exception. You should thoroughly review the terms of the syndication agreement and do your due diligence on the syndicator and the property before making a commitment. My name is Alyssa Baker. Feel free to reach out to me if you have any questions related to syndication or a project you would like to discuss with me.